Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to take a quick review of the market trend, and it's going to be quick because this was going to have to be short and sweet. Went to the doctor the other day, had a flu shot, and it worked. I think it gave me the flu. So we're going to do this real quick. But we could see yesterday that we had a bullish reversal with a kind of a spinning top gap up of the Dow up through the T-line. A strong reversal indicator. So all we needed to do is see positive trading today. However, as you saw, they opened this market lower and took it down, still below the T-line. More compelling, a MorningStar signal on the NASDAQ, but still below the T-line. That's your final criteria for showing there's been a change of investor sentiment, is you need to see that MorningStar signal or a candlestick reversal signal and a close up above the T-line. The fact that they gapped it down below the open of the previous day's candle tells you the bears are definitely still in control. The only thing to watch for now is maybe a sideways mode, but because you're in the oversold area. But that today's trading, that in also seeing it in the S&P 500, where you had a strong Morningstar signal, but didn't close above the T-line. The gap down tells us that there's still a lot of bearish sentiment in this market. That made a lot of short positions very viable. For example, Amazon, after a bear or a double doji, gap down, that's called your double doji signal, usually implying more downside. And things like APTV, when they came up to the T-line, did an indecisive day, and then gap down today, this makes for an excellent short position on a weaker open tomorrow. And again, that'll be a function of how the pre-market futures show the market opening. So Tesla, saw an interesting YouTube, somebody saying, is it time to sell Tesla? This is where candlestick analysis gives you a huge advantage over everybody's evaluation. There was the time to sell Tesla, when you saw a failure at the T-line, and since then they've never been able to close back up above the T-line. This is what we train people in the Candlestick Forum to do for themselves: analyze the high probability trade setups where you see a candlestick reversal signal and a close below the T-line. The same scenario on the bullish side. A few days ago, we recommended ALT, kind of a fry pan bottom, breakout of the at the 50 and all the moving averages. And then there was a stick sandwich. Not unusual to see a whipsaw type move at the end of a fry pan bottom, but it usually tells you there's a lot of new investor interest. And you can see what it's done even on a bad hair day. It was still trading higher today. And our recommendation on CYTK, excuse me, was based upon a double bottom, kind of a scoop type pattern, a Morningstar signal with a inverted hammer. And remember, the inverted hammer is one of your strongest percentage confirmation signals, that if you see an inverted hammer, especially in the oversold area, and it trades positive the next day, you've got a 95% probability or greater that you're going to be in an uptrend. And as you can see, the scoop type slingshot effect is still working, even when the market was selling off hard today. This is why candlestick signals and patterns produce much better probabilities of not only identifying the direction, but the magnitude of the direction. So with that, sorry, keeping this so short, with the markets trading below the T-line, expect some more downside. That'll be it. Everybody have a Merry Christmas. We'll do the next YouTube on Monday. Oh, I don't know. The market's closed on Monday, maybe Tuesday. That'll be it. We'll see you in the chat rooms.